Everybody, it is Saturday, April 6th, 2019, and another impressive week for the market here. Semis up close to 6%, oil 5.2%, and of course all these other broad indexes added to their year-to-date gains. Close to 20% for the Nasdaq right now, being led by the semis, almost up 30%. So let's take a look at the action. We remain, as we were coming into this week, above a rising 5-day moving average, meaning it's innocent until proven guilty. And this week you can see that right from that initial gap up, it found support along its rising volume weighted average price, anchored from that gap. So 287 is going to be the first important level next week. This market continues to go through every level that people have identified as resistance. That's why we call them potential resistance levels. There is a very strong shot that we will be seeing new all-time highs in the S&P 500 in the near term, and then most likely up towards 300. Doesn't mean there won't be pullbacks along the way, and we are a little bit extended in the near term, so keep that in mind and keep your stops tight. Something, if we continue to stair step higher, that would be the preferred way that we do continue to move up. The Nasdaq hasn't closed higher than this too many days in its history, so if you look at where we are, we've only spent about maybe 2 entire weeks above the level we're currently at. Same story here. We're getting a little bit extended, and it would be better to see some kind of pullback that maybe comes to the rising 20-day moving average. But the fact is, you can't fight this market or short against it looking for that short-term pullback. Not while we're above a rising 5-day moving average and finding support as we did in the S&P 500 at the volume weighted average price, and that was a level we were watching throughout the week on alpha trends each and every night. The Russell 2000 also above its rising 5-day moving average. This one I didn't think was going to get through this level. In fact, what I was telling subscribers I'd prefer to see would be something like that, but we're back above the 200-day moving average. The problem is, where has it come from? We've just come from 148 to 158 basically, and now that leaves us a little near term extended. Maybe we continue up a little bit, pull back, and then go for a bigger continuation move, as this market has some room to catch up, it would appear. But right now, I'm not thrilled about looking for a new purchase price until it's digested some of this recent gain here. Semiconductors, as we know, have been monsters. They are very close to all-time highs here on the SMH. If you look at where we closed on Friday, we've only closed maybe 2-3 days above this level ever. So be wary though that if it makes a new all-time high, you certainly don't want to be the guy buying the breakout, not after it's just run from 82 to 112. So the market is in an uptrend. It has been in an uptrend. It's holding key levels of support. So it remains innocent until proven guilty. The biotechs recovering nicely here. I did not expect this. We came down through the year-to-date VWAP and actually came to the volume-weighted average price from the December low, and that's where the buyers were found. But now we have, broken this pattern here in the very near term. We had a high, we had a lower high, and now we have a higher high. So that does not mean buy here, though, by any measure. You have to look at it and say, where has it come from? It's just come from 107-ish to 114. I would rather see, if you're looking to make a new purchase in these biotechs, let's look at a 130-minute time frame. I'd rather see that it pull down maybe in towards this level, digest these gains a little bit, and then perhaps get going higher. But after the move it's run with the recent volatility in here, I don't think it's a good purchase. I might end up being wrong in that. That's okay. Wouldn't bother me, but I just have to look at it from a realistic risk-reward scenario. The oil ETF USO continues to move higher. That, of course, is good for oil names. XOP is what I think is the best energy ETF at this point. You can see that it's broken some key resistance here this week after spending pretty much about a little more than 2 months turning sideways in here. So we've got a rising 20 and 50-day moving average, and it looks like it has room to run, maybe even all the way up towards that 200-day moving average up near 35.5. From a shorter term perspective, it did have a pretty good run here over the last 2.5 days. So maybe tomorrow, that is Monday, you look for a pullback down towards 31, 31 and a quarter, and then if it were to do that, then to buy strength. But buying it up in here, especially after the big continued move on Friday, might not be as good of an idea. And in fact, because it is such a strong breakout, maybe rather than waiting for a pullback all the way to the volume weighted average price from this move near 31, we take a look at a pullback down towards 31.50, which was Friday's volume weighted average price. So XOP looks like one to keep an eye on for. Look for some weakness and then buy strength after the weakness. You don't buy weakness because it might continue to be weak. Let's take a look at also the, let's just take a look at shares of Apple. I wanted to mention Apple for one reason. We've come up through that 200-day moving average. It's got this great run. It continues to show strength. The volume weighted average price of year to date, of course, we're above, and that's a 50-day moving average. Here's our volume weighted average price from the most recent earnings report. And as we tested that and held, now we're holding the volume weighted average price from the test. So I think that worst case stops go down in this level right now in shares of Apple. It does continue to move higher. Maybe it can continue to move up, to these old high levels, or at least up in, maybe a little bit above 200, but I think you just have to be, with a lot of these stocks, you just have to be aware of where you want your risk to be for your particular time frame, because we have had big moves, and it's healthy to digest those moves through a sideways correction in time, if not a price pullback.